Yo guys, what up? It's November 16, and we're going to go over what's going on in the stock market this week and a little bit of last week with CPI and the inflation reads. This is more of a general stock market news type of video that I like to do from here and there. I've been doing a lot of the earnings breakdowns, which most of my earnings season is pretty much done. I think we have two left to report, which is Planet 13 and Marvell Technologies. I'll probably be going over Wynn Resorts pretty soon, okay? But let's go over what's going on in the overall macro stock market today. But of course, before we do, please hit that like button. I definitely appreciate it when you do that. It shows me that you're getting value. That's all I'm trying to do, just to teach, give value, and just have some fun while we're doing it, all right? Also, notifications, subscribe, help me out with all that, guys, okay? Let's get to it. So we'll start with the Dow Jones. You guys can see here the Dow Jones on a one-year chart, pretty much close to being at all-time highs for the Dow Jones. So this is good. Of course, it shows confidence in the market. It shows that the market is also brushing off a lot of news there and moving to the upside very freely, especially after this dip that we suffered through in September and October. That was fun. Go back and look at those videos in September and October to go over and maybe refresh yourselves on how we did then and what we were doing, because I think we made the right moves then, okay? So moving on to the NASDAQ composite, same thing, guys. You guys see here that September-October slump, which we did really well, pretty much a cup and handle type formation for you guys technical analysis people with a cup and handle. That's a really nice, good technical indicator for those that like technicals, and we're pretty much kissing that $16,000 or 16,000 point rather level. Really nice to see tech stocks doing very well with the NASDAQ being this high. And of course, the S&P also in all-time record levels as well. So pretty nice to see, but also we got to be cautious. And let's go over that. Let's go over what's really driving this market. So we'll start with retail earnings. So when they talk about retail sales, retail earnings, these are the retail sales numbers. And it came out pretty much today this morning. And they showed that retail sales rose 1.7% in October, both for all items, excluding autos. So of course it makes sense. There's no supply of autos out there other than used cars. So the new supply of new autos is essentially nowhere to be found because of the semiconductor shortage. But at the same time, this report is showing that the consumer is strong despite inflation. The consumer is spending at an unexpected higher level. So it shows that there is strength of the consumer, which is one of the biggest fears the market had, that the consumer was losing its strength. These numbers do not show that. So this article here goes on to talk about retail sales, of course, and how much consumers spent on goods, ranging from online shopping and in-store shopping, and the growth of those numbers. But it shows here that the numbers indicate that consumers are willing to pay the higher prices despite a recent indication that sentiment is at its lowest level in 10 years. So, of course, we had some recent indicators that were showing that some confidence was being lost by the consumer, but this report quashes that. Not only this report, also the conference calls and earnings presentations by Walmart and Home Depot, and let's go over those. So I'm bringing up here the Walmart Q3 2022 earnings call transcript. And of course, it says 2022. That's kind of like their fiscal year 2022. They treat their fiscal years differently. But what I want to bring the attention to Walmart, and the reason I'm bringing attention to Walmart is because they are taking an opposite approach to inflation than a Home Depot is. So for the example of Walmart, when we go through the conference call and we do a Command F search for inflation, we're going to see things like this. We're going to see things like fighting inflation is in our DNA. Sam Altman loves that fight, and so do we. We think our truck drivers, merchants, replenishment teams, and associates that move inventory through the supply chain and our suppliers working together creatively and quickly. We have lots of variables to manage to deliver everyday low prices to consumers and simultaneously bring strong financial results for our shareholders. So in short, after reading this conference call transcript, and I'll save you the read, I'm not going to sit here and read everything to you guys. Essentially, Walmart is passing on the cost of inflation to themselves. They are taking the cost of inflation upon themselves in exchange for growing their market share. So they're saying, we're not going to pass on to person A, B, C, everybody, because we want those people to trust us, to trust that we have the lowest prices in the business. So instead of going to a Target, instead of going to Costco, we're going to come to Walmart for these lower prices. Okay, I'm not a price expert on whether Walmart or Costco has the lowest prices, but it is a fact. Today, the stock of Walmart went down after earnings because they indicated they were not willing to pass on the cost of inflation to their customers, but they saw in return a growing rate of customer base. So that is good for them, and they're saying we're willing to take the hit at this point in exchange for growing our customer base. That's just what they're doing. I don't own any Walmart stock, but that is one approach to inflation. But of course, on top of that, they talk in this conference call about doing really well with supply chain and having some really smart supply chain folks that are able to move product in a difficult supply chain environment, such as trucking and ports. So they've done a really good job navigating that. So good for Walmart. Now moving on to Home Depot. Now I'll save you the scrolling, but in the case of Home Depot is doing the opposite of Walmart. They're actually passing on the cost of inflation to you, the consumer. Okay, this is because they're not dealing in food and plastic items and toys and home stuff. They're dealing with lumber. They're dealing with copper. They're dealing with raw materials that do carry a higher price for inflation. So Home Depot is saying we're seeing less foot traffic this quarter than we did the quarter before, or the quarter in 2020, third quarter, of course. However, we're making more money with less traffic because we're able to pass on that cost of inflation to the consumer, and the consumer is not objecting to these price increases. So essentially, Home Depot taking the different approach, the more kind of in your face, we're passing on the cost onto you, the consumer approach, and they're being heavily rewarded with their stock price today. So we can see here on these charts how it's working for Walmart. We see Walmart here with a negative stock chart today after they reported earnings, and the market not liking that they're taking the cost, they're bearing the cost of inflation upon themselves. And we're seeing the exact opposite with Home Depot. The market is applauding that they are passing on successfully the cost of inflation to the consumer. So very, very intriguing stuff that's going on here. So regarding retail sales, guys, that's the story. But of course, to keep it in line with the story of inflation, okay, we have to understand that in this market, there are two teams that are pulling each way. There's the bears that are the team that believes that inflation is not transitory, that inflation would stick around for a while. And there's the other team, which is the inflation is transitory. The inflation is going to be gone, or transitory-ish, that it's here and it's going to stay for a bit, but not as long as the bears think. And those are the bulls at the moment. So when we're speaking about inflation, of course, we have to go to the latest CPI read, which was last week, and November 10th, and that's the Bureau of Labor Statistics, guys. And this gives us our CPI read, Consumer Price Index. And I've gone over this Consumer Price Index several times in the past. I have several videos about this on my Instagram feed before I moved to YouTube. Please check those out. I think those will be helpful for you if you don't know. But this is the stuff you have to know, right? Not only if you follow economics and the state of the country, if you follow the stock market, inflation is the biggest worry in investors' mind. But of course, what drives inflation? Things are not as black and white as like there's inflation and it's on everything. No, it's not on everything. Inflation breaks down into categories. So this report will tell us here, inflation did take a leg down in the first part of the second half of 2020, but it's now trending back up violently. Okay, but what is causing this increase? And of course, the CPI index report, this report shows us very plainly where it's coming from. And of course, here, if they're valued in this report, this is the major culprit of inflation right here, fuel and oil. We can see here that on an adjusted basis and on an October basis, it's the biggest cause of inflation out there. So essentially here, we see that oil and gas are the most expensive and the most value gainers, essentially, the ones that are adding the most gain to the inflation read with a little bit of food attached to it. So oil, gas, and food are the major drivers of inflation at this point. However, if we take the story of Home Depot and Walmart, we can see that Walmart is actually doing their best to fight inflation and give more ammo to the inflation is transitory team. If that makes any sense. Hopefully that makes sense. But also regarding this report, you can break it down as much as you want. If you scroll all the way down on this report, you can see that it breaks down every category of CPI to a granular basis. And I was looking through this report, and it's the same thing. It's oil, it's gas, and it's food, right? Food at home. And here we can see a little bit of meat, poultry, fish, and eggs driving inflation here. September and October. Here we have fuel oil, we have gas, and then what else here? We have energy. And I'm looking here through these numbers, and I just looked at them a couple times. We have here a 2 and a 3. Breakfast cereal, rice, pasta. What else do we have? We have a little, almost a 3 at uncooked beef steaks. Beef right over here. We have a 5. What's the 5? Pork chops. All right, let's see. Pork chops. This is kind of fun. 3.3. Canned vegetables. All food, guys. Right? Then we see here 2, 2, 2, 4. What's a 4? Sugar. Is that it? Yeah. Sugar and sugar substitutes. Inflation, guys. Sugar. Don't eat that sugar. Nobody likes it anyways nowadays. They just add it to their coffee, right? Other condiments. 3.0. What is here? 4. We're back to energy, fuel, oil. 9, 12, 6. Right, propane. See, major drivers of inflation. Gas right over here, and then we go back. We fall right back down to these reads. Kind of fun to do this. Tools, hardware, outdoor equipment. 3. 5 is outdoor equipment and supplies. And let's see what else. It's kind of fun actually. All right, nothing much here. You guys see that? So you guys can see the drivers of inflation here. Pretty dang obvious if you look at this report. So again, why are we surprised that the markets are sitting near all-time highs when the drivers of inflation seem to be transitory things, okay? And here, the price of oil around 80, and it's hovered around 80. Let's take a look at a chart of the price of oil, because that's important. So here we go, the WTI, West Texas Intermediate crude price for December. That's the futures price, and it's constantly moving, guys. This does not stop moving. 80.21, down about 0.5% or 0.7%. And we're looking here that on a 1-year chart, it's high, of course, because it's been running. We had this run here from August all the way to the beginning of November, but it's kind of steady. If you guys see here, on a 6-month chart, we can see a little bit more kind of context on when it's steadying here. Hopefully it'll steady more, because these oil producers are going to have more incentive to pump more oil. Remember, these guys are not pumping as much oil. The producers in the basin, the Permian Basin, and the Gulf of Mexico, they're staying pretty much at half capacity because they like these high oil prices, because they're able to sell oil at higher prices, able to return more money to shareholders through dividends and share appreciation. Everybody knows this. It's not that Congress or the president or, whoever has the finger on the trigger of oil. It's a supply and demand equation, guys. So when we see reads like this, if we can maintain 80 or even less, we're going to see the markets go higher, guys, because that's going to cut deep on the inflation read, as you guys saw there on the CPI. So again, guys, I want to refresh. Okay, so the inflation is not transitory team believes that these supply chain issues are not going to correct themselves, okay? And they're going to plague the markets, and they're going to plague supply for a long time. They also believe that the Federal Reserve has done an awful job, and they needed to raise interest rates a lot sooner. They needed to not buy as many bonds and cut or completely or taper very, very rapidly their bond purchase program, okay? Also, the employment environment. They believe the employment environment is too strong. People are making too much money. They're getting too many raises. People are quitting old jobs and getting new jobs with better pay, and that's not good for inflation. That's what they believe, okay? And also that the energy prices are going to continue to skyrocket, which I believe is incorrect. I think that energy prices can continue to go up, no doubt, but the competition between OPEC Plus and the producers in the Permian Basin and the Gulf is going to get to the point in which somebody's going to blink and somebody's going to want to start pumping more gas to make more money than the other guy. Okay. Now, when it comes to the inflation is transitory team, which is me, that's what I believe. We believe that supply chain issues will resolve themselves, that the market will correct these issues, and a free market will fix this. We've already heard this, okay, from Home Depot. We've heard this from Walmart. We've heard this from the auto manufacturers who believe that the second half of 2022, we're going to see the semiconductor shortage get better. We also see the price of commodities like steel, copper go down, silver go down. And that is positive for the markets. That is why we're hovering near all-time highs. And we need more of this to allow higher stock prices. All right, guys, I appreciate your time. I appreciate you paying attention. Please like and subscribe if you found that I give you any value. This is me just kind of going off the cuff and telling you what I think is going on in the market. Of course, I'm not a financial advisor. I'm not a trained or licensed professional. This is just me sharing my experience, what I think is going to happen. Hopefully, I give you something, or I'm hoping that I invite you into this market to make some money along with us who are trying to figure it out every day, okay? Peace out, guys.